Welcome to the latest video on Thinkorswim. So today we are going to look at different order types for buying or selling. So we're going to go over those different order types and show some examples in Thinkorswim. So first off, looking at buying orders. So your two orders that you typically use are limit orders, which is you set the price to purchase it. So if the option is currently at $2 and you want to buy it at $1.85, then you would put that in, and if the stock falls and the option price hits $1.85, then your order would trigger. If you're doing a market order, it's going to be purchased at the ask price whenever you hit submit. So if it's at 205 and you hit submit, it's going to purchase it immediately on the next option that goes out. So it could, if you hit it and by the time you hit it, it went up to 210, then that's the next that's going to get filled. So you're going to be filled whenever the next option is available for you to get filled. So I only recommend using market order if you're trying to get in quickly. There's a tight bid ask spread, and or it's like a momentum moving quickly, and you don't want to try to guess and try to get in and miss this movement. You could market order in and then continue to ride it up. You could have a risk of losing money if something happens, but that's the easiest way to get in if you want to make sure you get in no matter what the price is at that moment. Then looking at sell orders, you have, these are what is the most difficult for people to get. So you have a stop order. So after you place your order, you put in a stop on, I want to sell at this price. At a stop order, it's going to sell at a market order price. So it's going to be whatever the ask price is when you hit. So say you put $1 as your market or your stop price, it'll sell at $1 or lower depending on when the next order can get filled. So if the stock is falling quickly, you could run from $1 to $1.80 to $1.70 before you can get filled. So that's the risk you run on just placing a stop. If you put it in $1 and there's no one to buy your contract at $1, then the next time it can get filled is at 80 cents, then you'll get filled at 80 cents. So that is the one issue that you have on a stop order, but you will get filled and you will get it sold. With a stop limit order, you set the price that you want to trigger your limit order to be placed. So for that example, if you put in your stop at $1 and you put your limit order at $1, if at $1, it'll trigger your limit order for $1. If the stock is falling and there's no one to buy it at $1 and it goes to 95 cents, 90 cents, 80 cents, 50 cents, you're never going to get sold because you have your order in for $1. So if you're trying to make sure you get filled, no matter what, you can put a stop in there and you'll get filled. You could get filled at your stop price, or you could get filled at something less. It just all depends on if there's someone out there to buy the contract. If you put a stop limit, most of the time you'll get filled unless the stock's just moving really quick or there's a wide bid-ask spread. You could completely miss your order and it not get filled, and then you have to adjust your stop later, or it could get filled if the price falls to say 95 cents and your stop limit is for $1. Then the stock falls to 95 cents and then it comes back up and hits $1, then it'll sell if there's someone there to buy. Then you also have a trailing stop, which you place a stop, for example, 20 cents or 30 cents less. So say you bought it for $1 and now your trail stop is going to be at 70 cents. So say now we go up 30 cents, or your trail stop would be 0.30, so it's going to be 30 cents below. So it would be technically, if we hit 70 cents, it would sell. Or if we go up to $1.30, now the trail stop follows your price. So our trail would be now at $1. So as the price goes up, our trail, our stop follows by that increment. So if we stay 30 cents behind, then every time we move up a penny, our stop will move up a penny, staying 30 cents behind. Or you can set it as a percent if you want it 10% behind, or however you want to have that. So then as the stock goes up, the trail stop will follow. And then if the stock comes down, say you get up to $1.30 is the price. So now our stop is at $1, and now the option starts coming down to $1.10. Our stop is still going to be set at $1, and then we go back up. It'll still stay at $1 until we get above $1.30, and then it'll start going back up again. So you can help lock in profits if something's running and then it drops back down. Then it'll create your sell order, but you could also run the risk of, if it's just a slight pullback, then you could get sold before you could get the next leg up. So if it runs up 20 cents and then has a 25-cent pullback and then goes up another $1, then you would have got stopped out and missed that move because you had a tight trail stop on there. So you just have to be mindful and watching that and making sure you have a good trail stop in that doesn't affect you profits wise, but also doesn't get you stopped out. So we're going to go look at placing some of these orders in Thinkorswim. So we're just going to pull, looking here at SPY. So you have right here in your option chain, if you look at your ask price, so for SPY options, they're only a penny apart. So typically going market order isn't really going to affect you because there's only a penny wide spread. Others you could have up to $1 to $1.50 depending on the liquidity of the option. So you can just go click on the order. Now you have your order to buy. So we want to buy at limit or market. So these are more putting stops in. So I would recommend only using a limit or market order for buying your contract. So if you do market, you should see here it's going to be buying at 95 cents, which is our ask price here. If we do as a limit price, then we can change our price to whatever we want. So if we want it to be 90 cents, then we can set that and place our order, and it won't purchase it until the contract is at 90 cents. Within Thinkorswim, you can get, and during market trading, see that this would say at the price would need to drop about 12 cents to get us filled at 90 cents. So you have that to do for doing your buying. You can also, if you want to have your buy and sell all within the same when you're purchasing, if you right click, and then you can go to buy custom, and if you just want to buy it with a stop in place and not a profit zone, you can do that with this buy stop or stop limit. So if we do just with a stop limit, you can buy here for 95 cents, and it has it defaulted to a stop price of a stop limit of 5 cents. So you can adjust that to whatever you'd want. So your stop, so this is our stop. So we would say if we hit 50 cents, we are going to stop. It's going to create our stop order, and then you could put your limit order. So if we get to 50 cents, then I want to sell it at let's say, typically for SPY, I go around. You can usually get filled at the stop price, so it's not as important to have a stop limit. I typically just put them at the same price. You can put it for a little lower, so say 49 cents, just to make sure we get filled. If it can fill it at 50 cents, it will. It's going to be stop at 50 cents and fill us at 49 cents or better. So that would be already done when you place your order. Or you can do with an OCO bracket. So here it's going to put in a limit order to sell and then a market order for a stop. So it's going to market us. Currently, it just sets it at $1 above. Typically, it would be $1 below, but since it's not over $1, then it's putting our stop at 5 cents and our limit at $1.95. So you can change that. You can change your limit order to whatever you want to sell it at. Change your stop here. You can also change your order so you can make it a stop limit. So you can change all that there. You can even put it as a trail stop. So you can put that in. So you can change it here with the plus minus. So that's going to be following 10 cents behind. So if we put it in for 95 cents, our trail is going to be at 85 cents. So if we go up to $1.05, then our trail would be 10 cents behind. So it would be at 95 cents. So you can do that, or you can change it to percentage. So if you want it to follow whatever 10 cents behind, so 95 cents minus 10% would be like 0.95 cents. So it would follow it at a 10% stop behind. So you can set that up there, and then you just hit confirm and send, and it would place it. Just looking if you already have your order created. So I have these Walmart calls. You can create a closing order. Right click on your closing order and go to sell. So then you just have your order here to sell. So you can place in your trail stop. So currently it's at a trail stop of market, so it'll fall 10 cents behind what we're at, so $1.21, so $1.11. So if it falls back there, then it'll sell. Or you could put a trail stop limit in. So the only issue you run into that is you don't know what the limit price would be. So say you go up to $2.50 before it starts pulling back, and then it triggers your order here. It's still going to try to sell for this price or better, which is pretty much going to sell for the market price. So I don't know when you would use trail stop limit, but I would just suggest using stop order if you just want to put a stop in. So it's going to sell at a market price if we hit, say, $1. So once we hit $1, it'll trigger and sell at the market price. So whatever the ask price is, it's going to sell at that price. If we do a stop limit, so we have our stop, it's going to trigger at $1, and now we have a limit order for whatever price we want to put. So typically you would want to put it around that same price or lower. So we'll put it at, for example, 98 cents, and then you just hit confirm and send. It tells you your order here, selling to Walmarts at a 98 stop limit with $1 mark. So once we hit $1, it'll sell at 98 cents. It gives you your max profit, which would be your 98 cents times, I have 2 contracts. So you have that there. Yeah, or like I said, you can put your trail stop. They have down here MOC and LOC. So that is market on close or limit on close. So I believe like if you have this, it's going to sell at market price at, I guess, right before the close of the day. And this is going to be a limit order. So you can put, you want to sell for $2.20 if we hit at the close of the market. I probably wouldn't recommend it. I had to look up to see what those meant for this video, but I don't know when you particularly use it. You could have, if you want to, maybe possibly if you're buying something, if you want to buy at market, if at the end of the day, if it hits a certain price, but you could just put in a limit order to buy at a certain price at the end of the day. So I'm not sure when that would be applicable, but I just wanted to mention it since it was listed here on this list. But I think that wraps up going through the different order types. If you have any questions, please leave them below and I'll be happy to get back with you. And if you found this helpful, please like and subscribe. I would greatly appreciate it. Have a great night.